Thank you. Hi, this is Dr.S.VALLUVAN. In this video, we are going to have a look at the importance and objectives of accounting standards. See, the purpose of accounting standard is to ensure the transparency, consistency, comparability, adequacy, and the reliability of financial reporting. To ensure that financial statements are prepared in accordance with the generally accepted accounting measurements. To provide information to the users as to the basis on which the accounts have been prepared, and to bring about the uniformity in financial reporting to ensure the consistency in the data published by the enterprises. The financial statements have incredible importance for both internal as well as the external stakeholders. Stakeholders like the persons who are having a financial interest in that company are called stakeholders. They basically are report card for the company. Financial statement is a report card for the company. So it's important that they are regulated and do not report misleading informations. And the accounting standards provide us with a framework for these regulations. Let's take a look. Accounting standards are basic policy documents. Their main aim is to ensure the transparency, reliability, consistency, and comparability of the financial statements. Transparency. So whatever the informations are there in the financial statements are there in the company's transactions, that should be transparent, that should be disclosed, and the consistency in the data is very important. In the comparability, say for example a person looking at the financial report of a company, it must be comparable. The financial report or the financial statements must be comparable between the companies for taking informed decisions for an investor. They do so by standardizing the accounting policies and principles of the nations. So the transactions of all the companies will be recorded in a similar manner if they follow these accounting standards, because the accounting standards are generally accepted accounting principles throughout the world. These accounting standards are issued by accounting body or a regulatory board or sometimes by the government directly. In India, ICA, Institute of Chartered Accountants of India, they're framing the accounting standards, and the IASB, that is International Accounting Standard Board, they're framing the international accounting standards for the entire world to bring the uniformity in the preparations and presenting the financial report across the world. In India, the accounting standards are issued by the ICAI, as we saw earlier. Accounting standards mainly deal with the four major issues of accounting, namely recognition of financial events, measurement of financial transactions, presentation of financial statements in a fair manner, disclosure requirement of the companies to ensure stakeholders are not misinformed. So the objectives of accounting standards. The main aim is to improve the reliability of financial statements. Now, because the financial statements have to be made following the standards, the users can rely on them. They know that not conforming to these standards can have serious consequences for the companies. Then there is a comparability. Following these standards will allow for inter-firm and intra-firm comparisons. This allows us to check the progress of the firm and its position in the market. See, the company A and the company B can be compared. based on the financial informations between these two. Then the investors or the financial managers or the stakeholders can take the decisions by comparing these two company A and B. So the financial statements or the financial informations must be comparable. To bring the comparability, the companies across the world have to follow the accounting standards. It also looks to provide one set of accounting policies that include the necessary disclosures, requirement, and the valuation methods of various financial transactions. Now we look at the benefits of accounting standards. To improve the credibility and reliability of financial statements, it benefits to accountants and auditors, determining managerial accountability, reform in accounting theory and practice. It ensures uniform accounting procedures all over the world. Uniformity in accounting. Accounting standards provide rules for standard treatment and recording of transactions. They even have a standard format for financial statements. These are steps in achieving uniformity in accounting methods all over the world. Because in a global market, anyone can run a business in any of the world. Anyone can invest their money in any country. So one should know the financial informations about a company in which is going to invest his money. So to bring the uniformity, to bring the reliability, the accounting standards must be followed by all the companies. As we saw earlier, the benefits are improve the reliability of financial statements, and it prevents fraud and accounting manipulations. How? Accounting standards lay down the accounting principles and methodologies that all entities must follow. One outcome of this is that the management of an entity cannot manipulate with financial data. Following these standards is not optional, it is compulsory. So these accounting standards make it difficult for the management to misrepresent any financial information. It even makes it harder for them to commit any fraud. It helps the auditors. The accounting standards lay down all the accounting policies, rules and regulations, etc. in a written format. These policies have to be followed, so if an auditor checks that the policies are being correctly followed, can be assured that the financial statements are true and fair. Thank you.